Hatem Diab's with us, managing partner, Gerber Kawasaki Wealth Investment Management. Wonderful to have you here in person for the first time.
Thank you for having me. It's great to be here.
We have so much to discuss. I'd love to just get your big picture on the markets. We have Fed, we have jobs. I mean, you and over at Gerber Kawasaki, you have so many great calls that you guys make. But what's the big picture?
I think the Fed is really the biggest picture right now. When you can't really fight the Fed. I mean, that's like the number one reason, number one item in the markets. And right now, the Fed is telling you that the economy is going to be tougher, or at least rates are going to be higher for longer. So as a result, the economy is going to be tougher, and the market is just reacting to that. So for now, I think we're just looking at this, and we can't say this time is different because it's not.
When we think about what the Fed is planning to do, right? So we're all prepared for 25, 50 basis points, whatever it's going to be, for the next few meetings, couple at least, meetings. In the meantime, it's very hard to put together a portfolio, trying to pick the winners. We had the 2000 boom tech stocks. We had after the financial crisis. We had after COVID, where things just sort of came more easily, and you could pick the low-hanging fruit.
Sure.
Now it's more difficult to be a stock picker, right?
100%. So if you think about it, there is a new asset class right now, which is basically cash. We haven't seen this in the last 12 years.
True.
But I can get 5% buying treasuries or cash. So the hurdle for taking risk, the hurdle of owning an asset right now is much higher. You have to have a higher return, and you couple that with the fact that the economy may get tougher, and as a result, companies have to be a lot more stringent with their capital. It means that the stocks that you want to own going forward have to provide you that, more than 5%, but 10, 15, 20% return over the long run.
And you have to be excited about what it is that you're investing in. I mean, we've had so many conversations about so many different things. And in fact, you and I talked ahead of the Tesla Investor Day, and you were saying Elon Musk is going to come out and that the succession plan was something that would be of interest. I didn't necessarily think that was going to be the number one topic, but it turned out you were right on. I admit, I was looking for a lot of things from Investor Day, and I think people got enough from Investor Day. What was your takeaway?
I mean, I think he showcased the depth of the team, right? I think we saw, 35 executives that came out, all very capable. And that's what you want from a bigger company. You showed a Tesla that is more growing up, that is building some things for the future. It has a huge moat. Very, very tough to compete with. I mean, if I'm an executive for another car company, I'm scared. I see what they're building, what they're doing. I think I'm really trying to figure out what I do.
Where do you think Tesla heads? I mean, when you look at the possibilities, I'm sure you have a bull case, but basically a base case. It's at 176 now.
Right.
Where do you think Tesla's headed?
I mean, I think if you go back, it's part of that secular growth story where Tesla is a company that is in the right sector, which is the electrification of the fleet.
Right.
So they are, the leader in that space, and that space is growing. So for us, when we look at Tesla, we think there's really no better company to be able to accomplish the growth of 85 million cars that need to be electrified for the next 10 years. And I don't know, maybe Tesla will get to the 20 million cars. So it's a really huge upside for us.
Right, understood. And people say Tesla's not just a car company, right? It's a battery company, and they're doing all their manufacturing all over the world, which brought them some ease during COVID. They were able to move things around and sort of battle some of the hurdles of the supply chain that some of the other companies had to deal with. Let's turn your attention over to streaming, because you have top picks of Netflix and Disney. What's going on in the world of streaming? What is it that you're watching, and what are people talking about? Why are these names that stand out to you?
I mean, it's super interesting, right? When the pandemic hit, basically all these streamers have gone out, Netflix especially, gone up quite a bit because everyone thought we're going to stay home, we're never going to get out, right? And they've accomplished some amazing growth numbers, almost 240 million subscribers. And there's been so much money spent in the whole space. Hollywood was flush with new cash going for content towards these streamers. And you have Disney Plus that came in, but also you have Paramount and Comcast and all these companies that came in and really spent a lot of money. But now that things are getting a little bit softer, companies are looking back and saying, okay, is this model going to work out for me long term, right? So you're seeing some pullback right now, and especially with the Discovery purchase. With Hollywood right now, I think Netflix is the winner. That's an obvious one. And Disney had some issues, but I think having Iger back is really changing the rhetoric around what's going to happen with Hulu, what's going to happen with their streaming business, how much money they're going to spend on content, and so forth.
And, you know, ESPN is another part of Disney, too. And there was a lot of criticism of Bob Chapek and how he was running Disney. And so a lot of excitement when Bob Iger came back on. And even Nelson Peltz, who was trying to get on the board, he said, look, based on the reorganization and what they are planning to do, I'm not going to push to do that anymore because I like what they're doing. When you think about Netflix, what is the growth for Netflix going to be more abroad? Is the penetration here in the States pretty much fulfilled?
Yeah.
You know, they'd have different price points around the world, right?
Yeah. The global story for sure for Netflix is bigger, but also there is a lot of households in the US that are not paying for Netflix. So the password crackdown is going to create some additional revenue. They think as much as 50 million households have Netflix without paying for it. So there's a huge upside there.
Right.
Think
the sharing of the passwords,
correct.
right?
Yeah. For Disney, I think nobody liked Chapek. You know, he was not he was a Parks guy. He really kind of vexed or hurt a lot of the creatives in Hollywood, and then I think eventually that just did not work out, and everyone's excited with Iger coming back right now. So.
And where does Apple fit into all this picture? You know, there's so many parts of Apple. You have Apple TV, of course.
Yeah.
And then Apple, the big picture of Apple.
Yeah. I mean, listen, Apple is spending some real money in Hollywood. I think it's still a passion project for them right now, streaming, but it's really about part of that service bucket that they bring in. I think for me, Apple, if Hulu is going to be in the market in 2024,
right?
And if Apple can come in and buy it, and it's going to be inexpensive versus if they do, that may be an interesting play. Not a lot of people think it's going to happen, but I think that they may be looking at that.
That's very interesting. We'll quote you here in case it does. We'll remember that you said that. I mean, we also have YouTube, which has done very well for Google, and having those shorts, that has been very good. And if TikTok goes away, that also helps these streamers, basically. I mean, in some way, shape, or form. Well, I'm so thankful that you were here today in person, and a lot of bullish calls on some of these things. Hatem Diab, thank you.
Thank you.
Managing Partner, Gerber Kawasaki Wealth and Investment Management.